Hey everybody, welcome in to the live streams. This is Market Takes. I am Dion Rabouin here with you. Thank you for being with me on my YouTube live channel. And I know you could have been anywhere in the world right now, but you're here with me, so I thank you for that. To everyone who's watching on the re-recorded, the VOD, who's watching this later, I appreciate you. But those of you who are here with me live, thank you very much. Y'all are some real ones. Look, it is an interesting time in the markets right now, a time of a lot of volatility, a time of a lot of uncertainty. I want to get into that and want to talk about what's going on in the housing market and how that is really going to help us kind of peel back some layers of this onion that is the economy right now and tell us what's really happening and tell us what we should be looking out for in the future. So this week we get a number of big reports on the housing market that I think are going to tell us a whole lot about not just the housing market, but about the economy. I'm going to break all those down, tell you what those mean and what to look out for this week. As we check in on the markets, it is another rough day, a lot of red, especially in the NASDAQ. The NASDAQ down more than 1% today. It is May 16th, Monday, of course. Market down about more than 1% on the NASDAQ. The Dow about flat, and the S&P 500 down about 0.5%. If you're looking out into the rest of the markets right now, we've seen a kind of starting to pull back on those bond losses. As you know, the Treasury market has had the worst start to a year on record. We are seeing some buying in the Treasury market. The US 10-year yield, which is the benchmark, that's up a little bit today in terms of prices, down a little bit on the yields. Also gold, which had started following, is back up, or sorry, not gold, excuse me, oil. Oil, which had been falling, is back up above $110 per barrel. On the WTI side, Brent crude, they're about the same at about $113 a barrel. So definitely worth watching what's going on there in the markets. Gold, which I was going to mention, is just up a little bit. Not a big move in gold, but staying above that 1800 level. So all of that to say that we're seeing a little bit of fear in the market. Right now, investors buying those safe haven assets, US Treasury bonds, buying a little bit of gold, stocks selling off a little bit. And all that really, we're in this environment of a good deal of fear right now. We've seen 6 straight weeks of selling on the S&P 500, 6 straight weeks of losses on the NASDAQ, 7 straight weeks of losses for the Dow Jones Industrial Average. So a consistent selling pattern, a lot of fear. The VIX, which is Wall Street's quote unquote fear gauge, is back around 30. So those are all things that tell us there's a lot of fear. If you were watching this weekend, Lloyd Blankfein, he is the senior chairman at Goldman Sachs, saying that he feels a recession is very, very likely. He said he would be very prepared for it. If you are running a big company or if you're just running a household. And the Goldman Sachs bank's economists cut their expectations for growth for the US this year. Again, another credible, serious person coming out and saying, hey, I see some risks for the US economy this year. Also want to point out a report that came out this morning, the Empire Manufacturing report from the Federal Reserve Bank of New York. That showed a negative print, one of the most negative prints we've seen, in fact, wiping out the gains from the previous month, which was a very good print. So we are starting to see some of those numbers coming in on economic reports that are showing a downtrend. We saw, if you remember on Friday, I told y'all to look out for the consumer sentiment report from the University of Michigan. That came in a new low, a new decade-long low, lowest in more than 10 years. So all these things, like I said, pointing to a worry about recession from serious people, from serious economists who know these markets and who watch them and who take them seriously. And I want to get into housing and talk about why what we're going to see this week is going to help get you guys up to speed, get you educated on some of the things that they're seeing in the markets and some of the trends that we're seeing. So this week we get the National Association of Home Builders May report. That comes out on Tuesday. Also on Tuesday we get building permits and housing starts. Going to tell you what those are and what that means. We also get the big kahuna for this week is the existing home sales report for April. You'll definitely want to tune in for that. So I'm going to get into what each of those are, why they're important, what they mean. Also want to tell you about the not so sneaky. I usually tell you about a sneaky important release for this week. I'm going to tell you about a not so sneaky but still important release that you need to watch for this week. That is the US retail sales number. Those of you that follow markets know that that is usually very well watched. So we're going to get into all of that. So look, let's get into the National Association of Home Builders Housing Market Index. That's coming out on Tuesday. It's the index for May, so it's early. We've only gotten through about half the month, but we're going to get that preliminary report from the National Association of Home Builders on Tuesday. That's basically going to tell us what home builders are thinking. As you've heard, if you've been watching the housing market at all, we have a distinct and historically low level of supply, meaning there's just not a lot of houses. So home building is one piece of that, and it's a very large piece of that. The other piece is that folks who have homes, who are in their homes, just don't want to sell. But the half that we can look at and find out some more information on home builders, what's their sentiment like? Because if home builder sentiment is low, it means they're probably not going to be building a lot of houses. Now, last month we saw sentiment was still high. It was at a 77, which is pretty well above that 50 level, which separates good from bad. Just think, if it's above 50, that means sentiment is generally good. If it's below 50, that means sentiment is generally bad. But sentiment has been declining, consistently declining. We've seen sentiment drop well below 2021 levels, and it dropped in April for the 4th month in a row. We'll see if May turns that around. It's expected to drop. Economists are predicting that we're going to see another drop, so that'd be 5 straight months of drops in home builder sentiment. Buyer traffic that home builders is seeing is the one piece of that that's consistently been around that 50 level, which again separates good from bad. So watch that buyer traffic number if you're digging through that report this week. We also get, on that same day, on Tuesday, housing starts and building permits. Now this is one report. It comes out, you hear about both how many houses were actually started, how many houses did we put the shovel in the ground and actually start building, and how many permits were issued to buy the houses. Both of those are going to be big numbers that tell us what's actually happening. Home builder sentiment is great because it says, okay, what are these people thinking? What do folks in the business actually think? Are they pushing more business out there? Are they getting more work? Are they hiring more people? Are they building more houses? But then we actually see the numbers, and that's housing starts and building permits, and we will get that on Tuesday as well. On Thursday, we get the big kahuna, as I'm calling it. That is existing home sales. Now, existing homes make up about 90% of houses that are on the market. So this existing home sales is a bigger report than the new home sales report and those other reports like housing starts, building permits, which just tell us about new homes, right? We need those new homes to create more supply, but the sale of existing homes, that tells us what the market is really looking like, what those machinations in the market are really doing. So existing home sales, we get that report Thursday morning. That's definitely going to be something to watch for. Home sales month over month. Last month fell for the 2nd month in a row, down almost 3% from the prior month and 4.5% from a year ago. Now, that's a trend that we haven't seen much of in this year, but what we have seen is year-over-year sales, as in comparing March to March 2021, comparing April to April 2021. Those have fallen every single month since August of 2021. So we're seeing a continued decline in sales in 2022 from the levels that we saw in 2021. That's expected. 2021, as I've said, was basically the best year of housing ever, but it's all about the trend. The trend is telling us that we are seeing a slowdown in buying from people, a consistent slowdown month over month now, whereas we were just getting it year over year prior to March. So definitely something to watch out for. We're also seeing that slower demand mean that there is greater inventory, but unfortunately, the inventory is not being sold a lot of times because it's just priced too high, because that's the other piece of this that we're seeing. Even as sales slow down, prices continue to rise. We saw existing home sales median sales price, the median existing home sales price rise to a record high of $375,000 or over $375,000. That was an increase of more than 15% from a year ago. That increase is almost $50,000. So an average existing home is about $50,000 more expensive was about $50,000 more expensive in March than it was in March 2021. If you're seeing different numbers for those average home prices, you might see some showing you over 400,000, some showing over 450,000. That's because different people measure this different ways. This is coming from the National Association of Realtors. They're putting that median existing home sales price at $375,000. The Census Bureau measures it differently. Different realtors associations measure it differently, but National Association of Realtors, they've tracked this for a long time. They've got it at over $375,000 right now. Now, the reason I think this report will be especially important was because April was the month we saw Treasury yields spike up higher. You had a record month, in April for Treasury yields. Treasury yields are directly tied to mortgage rates. When Treasury yields go up, mortgage rates go up. And it's not the exact same increase, but you can bet that when Treasury yields go up, mortgage rates are going to go up. And we saw mortgage rates rise, average mortgage rates on a 30-year fixed mortgage rise to the highest they've been in over 10 years during the month of April. So how did buyers respond? Did prices continue to rise higher? Did sales continue to drop? Or did we see a break in that trend because of these higher than average interest rates and mortgage rates that we were seeing in April? Yields, like I said, on the 10-year note, which are basically the ones most correlated to the mortgage market, have started to come down. We saw them peak up over 3.1% just about a week ago. They're now down at about 2.9, 2.85%. So a pretty significant drop in those yields. Will that correlate to mortgage rates, and will that make a difference? If you're thinking about buying a home, does the difference between 5.3 and 5.2% mortgage rates make a difference to you? Probably not, but that difference between 4.9 and 5.0, that probably did make a difference. So what did we see from the mortgage market last month? That's going to tell us a lot. Want to get into before we get out of here, and I want to thank you all for being with us again on this live stream with me, Dion Rabouin, a reporter for the Wall Street Journal, talking about what's going on in the housing market, also how all those things relate to the economy. And a big report we've got coming out this week is retail sales. That's expected to decline in April from March. And that's really important because we are seeing inflation continue to rise higher. Now, when inflation rises higher, that means things cost more. That means retail sales should be higher because they're not counting the number of things that were sold. They're counting the amount of dollar volume that was handled. So if the amount of dollar volume that was handled declines while prices went up, that means people are really pulling back from purchasing and really slowing down what they're doing. So that's something definitely to watch. Also, a really important note about the last report we saw from March retail sales. You saw an increase in overall retail sales, but almost all of that, and in fact more than all of that, came from increased price of gasoline. Core retail sales, if you exclude gasoline, actually declined, and online sales, which had been picking up consistently for a long time, declined by 6.4%. That's something to watch out for. If you excluded just gas, retail sales actually fell by 0.3%, while overall prices rose by 1.2%. What does that mean? That means there's a 1.5% difference between what prices did and what sales did. That's not good. So if you're on recession watch, again, just something to keep track of and say, uh-oh, there are some numbers moving in the wrong direction. We will see if numbers continued to move in that wrong direction or if they picked back up in April from where they were in March. Definitely something to keep an eye on. So again, thank you all for tuning in and being with me on this live stream. We talked through the National Association of Home Builders home index and what that's going to be doing, what that's telling us about the economy, what home builders think. We talked about housing starts and building permits, which is going to tell us how many new projects got started. We also talked about that existing home sales report that's going to be coming out from the National Association of Realtors. Those are Tuesdays for the home starts, housing starts, and building permits. As well as the NAHB index, and Thursday for that existing home sales report. And watch out for that retail sales report this week, the not so sneaky report that I think you need to look out for. Anyway, I'm Dion Rabouin. Thank you guys for being with me here as we walk through this on the live stream. Housing, very important. Make sure you're looking out for those reports this week. And be with me next week. We do this every Monday right here on YouTube. We'll do it again next Monday. I hope to see you there.